Welcome. We are following this book. Today's lectures on plant assets, natural resources, and intangible assets. We have 5 learning objectives. Objective number 1, explain the accounting for plant asset expenditures. Objective number 2, apply depreciation methods to plant assets. Objective number 3, explain how to account for the disposal and of plant assets. Number 4, describe how to account for natural resources and intangible assets. Learning objective 5, discuss how plant assets, natural resources, and intangible assets are reported and analyzed. Today we discuss objective 3. Learning objective 3, explain how to account for the disposal of plant assets. Learning objective 3, explain how to account for the disposal of plant assets. Here, please look. Companies dispose of plant assets. Dispose of plant assets in 3 ways. That means after their life, that means assets life, just 3 ways they have used for disposal. Number 1, retirement. Number 2, sales. Number 3, exchange. Okay. So here methods of plant asset disposal. This is the methods. Number 1, sell. So we can sell our assets, and so here equipment is sold to another party. To another party we can sell the plant assets after disposal. Number 2, retirement. Equipment is scrapped or discarded. Number 3, exchange. Existing equipment is traded for new equipment. We can exchange this. Okay. So these 3 methods. This on sale, this on retirement, this on exchange. Okay. So record depreciation up to the date of disposal. Okay. Record depreciation up to the date of disposal. Eliminate asset by 1. Debiting accumulated depreciation and crediting the asset account. Please look this point, everybody. Number 1, just when we purchase our asset, that times our asset debit or cash credit or account receivable credit, account payable credit, this is another matter. Actually asset debit when we purchase asset, but for the disposal date asset must be credit. And accumulated depreciation, normally we write down depreciation expense debit and accumulated depreciation credit. Okay. Accumulated depreciation credit. So here this is credit, but now date of disposal it must be debit. So here eliminating asset, that means when we eliminate the asset, when we disposal the asset, when we minus our asset, that times the debiting accumulated depreciation and crediting the asset accounts. I think everybody is clear. Move to next slide. Okay. Retirement of plant asset. When we do this, the times no cash is received. When retirement of plant asset, the times no cash is received. Number 2, decrease or credit the asset account. Earlier I told this matter. Asset, when we purchase our asset debit, but now the asset will be credit, asset credit. Okay. For the original cost in the asset, original cost. Number 3, decrease or debit accumulated depreciation for the full amount of depreciation taken over the life of the asset. Okay. I think everybody is clear here. Again I can tell this matter, I can express this matter. Suppose we have purchased our asset here $1,000. Okay, $1,000, and our accumulated depreciation suppose $1,000. Okay, so if we dispose this asset $1,000, if we dispose this asset, that times the accumulated depreciation will debit and this asset will be credit. Okay. So we move to next slide. Please look. Retirement of plant asset. Here we have an example. Illustration. Hobart Enterprise retires its computer printers. Enterprises retires its computer printers. So his cost 32,000. The accumulated depreciation on these printers is 32,000. Prepare the entry to record this retirement. So here accumulated depreciation will be debit and equipment will be credit. Question: what happens if a fully depreciated plant asset is still used full to the company? Just the very simple answer will be here company continues to use the asset with no additional depreciation being recorded as the asset is fully depreciated. Here 2 points, please look. We have purchased asset, that means computer printers. This place we purchase computer printers $32,000. Okay, and after its accounting period, the accumulated depreciation is service life, that means computer service life. The accumulated depreciation 32,000. That means here 32,000. Okay, so 32,000. We know that when we purchase our purchased our computer printer, that times printer debit or asset debit, okay, or equipment debit. Now the equipment will be credit, and accumulated depreciation always debit, credit, sorry, depreciation expense debit, and debit, and accumulated depreciation credit. So this credit now will be debit when you dispose the assets. That times the journal will be such way. Okay, I think everybody is clear. And next point is, this is the accumulated deficit or depreciated plant, that is already depreciated. This plant, that means computer printer, depreciated 32,000. We have no extra amount. But if we think that it will run for few years, suppose 2 years, at that times we need not to charge any depreciation. So we call here company continues to use the asset with no additional depreciation being recorded as the asset is fully depreciated. The asset is fully depreciated, but no additional depreciation being recorded. Okay, so I think everybody is clear. Now illustration, here the sunset company discards delivery equipment, discards or dispose their delivery equipment that cost $18,000 and has accumulated depreciation of $14,000. Okay, the journal entry is, what would be the journal entry? So here please look, accumulated depreciation according to question 14,000, and this is the equipment 18,000. So please look here, accumulated depreciation is 14,000. According to question, this is 14,000, and our cost of the machine, that means equipment, 18,000. So this 4,000 will be loss on disposal of plant assets. This is loss. Okay, so we know other expenses and losses must be debit. Okay, the companies report a loss on disposal in the other expenses and losses. This will be other expenses and losses column ahead. So section of the income statement, and we show it in our income statements expense side. Okay, so I think it's clear to everyone. Now we move to next slide. This is the sale of plant assets. Compare the book value of the assets with the proceeds received from the sales. Very easy to understand, I think. Please look here, everybody. Suppose this is book value of the asset with proceed received from the sale. Suppose now net book value here $100. So if proceed exceed the book value, proceeds or sales or etc. exceed the book value, we call it gain or disposal occur. Suppose we have sold this $120. Okay, so this excess $20 excess $20 will be our gain. Suppose this is proceeds are less. Suppose this is less amount. That means if we sells this amount, if we sell this amount, suppose $80, $80. So $20 less. So we call this $20 is loss. This is loss amount. So here very simple discussion. I think everybody is clear. Proceed exit, that means this is gain, or proceed are less than book value. That compare with this book value. The book value, this is 120, this is exit, and this is 80, this is less. The less means this is loss, or exit means this is the excess. That means gain. Okay. Move to next slide. Gain on sale. Very simple answer would be, I think, gain on sale. Please look here. On July 1, 2017, read company sells office furniture. Here, office furniture 16,000 in cash. Sale. This is the sale price. The office furniture originally cost 60,000. That means this is the original cost 60,000. Suppose when we purchase this here, it was 60,000. Suppose here 60,000. 60,000. Okay, 60,000 amount. So this 60,000, and here the sales now this point 16,000. 16,000. Okay. So as on January 1, 2017, this is July 1, 2017. This is January 1, 2017. It had accumulated depreciation 41,000 amount. January 1. Suppose here this is the point. This is the January 1, 2017. This is the January 1, 2017. This one. This is the July 1. Suppose this is the July 1. Here 6 month. 6 month. Okay. So we are selling our office furniture this place. That means after 6 months. But this place we calculated our accumulated depreciation. It had accumulated depreciation 41,000 taka. That means this place our accumulated depreciation depreciations were 41,000 taka. So depreciation for the first 6 months of 2017 800 taka, 8,000 taka. Sorry, this first 6 month depreciation 8,000 amount, $8,000. Okay. So here $41,000, $41,800. So total will be 49 $49,000. Okay, $49,000. The depreciation for the first 6 months $8,000. Prepare the journal entry to record depreciation expense up to the date of sale. Prepare the journal entry, record depreciation. Okay, now this is the record for $8,000 depreciation expense, $8,000, accumulated depreciation $8,000. This is the prepare the journal entry to record the depreciation expense up to the date of sale. Okay, now gain on sale, just we are discussing regarding this matter. Cost of office furniture 60,000. Already we have seen that cost of office furniture. Cost of office furniture 60,000. $60,000 less accumulated depreciation in total. That means this two on $49,000. So book value at the date of disposal. When dispose this machine, we are getting this amount. Suppose this is 60,000. This is the cost price, and after the accounting period, suppose after 5 years, the machine the office furniture will run 5 years. Suppose After 5 years, we are getting $49,000 as our accumulated depreciation. So 11,000 will be our, 11,000. This is book value at the date of disposal. This is book value at the date of disposal, 11,000. Okay. So now proceed from sale. The when we sell this furniture, we have got $16,000. So gain on disposal of plant asset 5,000. Okay, this 11,000 now the book value 11,000, but we have sold it $16,000. So $5,000 will be the gain on sale. Okay, so illustration, right, records the sales as follows. You know that everybody knows that our equipment must be credit and accumulated depreciation will be debit, and gain always, gain or revenue always credit, and cash, we have received cash is debit here during sale or at the time of sale. That means cash will be debit. So very simple to understand the journal. Accumulated depreciation debit, this is the principle or rules here. When the when we sell our disposal furniture or something like this or equipment, that means it must be credit, and gain always credit. This is the current journal, the gain on disposal of plant asset, and cash always debit, because of this is happening now. This is cash, this two one is happening now, this gain on disposal, and this two just we have got it according to principle, that means according to rules. Equipment, when any furniture or equipment is disposed, that times equipment must be credit and accumulated depreciation must be debit. Okay, I think everybody is clear. Now illustration, assume that instead of selling the office furniture of 16,000, its sales is 9,000 instead of. That means assume that instead of this 60,000, now the company sells this office furniture, furniture 16,000. Okay, selling the office furniture, rate sales is 9,000. So the same matter, the previous slides I have shown that it's 16,000, but now only 9,000. It must be occurs loss occur. So occurring loss on disposal of plant assets to 2. So you know that this loss will be debit, loss debit $1,000. Okay, so cash, this on accumulated depreciation, this on equipment. Okay, I think everybody is clear. Now overland tracking has an old truck that cost 3,000. That cost 3,000. That cost $30,000. Okay, and it has accumulated depreciation 16,000 of this truck. Overland has decided to sell the truck. What entry would overland tracking make to record the sales of truck? 60,000 cash, sales 17,000 cash. Okay, so we are getting this cash and accumulated depreciation. This is the 16,000 and cost price 30,000. So the balancing $3,000. You know, this is the gain. This is the gain on disposal of plant assets, 3,000. Okay, how could we get this? Suppose 30,000 minus 60,000. That means 30,000. This is our cost, and 60,000. This is our accumulated depreciation. So here we are getting 14,000. 14. Okay, so 17,000 minus 14,000 equal to 3,000. Equal to 3,000. I think everybody is clear. Now same question, same example, just now the truck, the sale of truck 10,000. 10,000. So that times this 10,000. At that times we are getting cash 10,000 and the truck cost 30,000 and 60,000. This is accumulated depreciation. So we call this is the balancing figure 10,000 30,000 minus 16,000. So it would be 14,000. So 14,000, 10,000 minus 14,000. So this 4,000 would be loss on disposal of plant asset. I think everybody is clear. Okay. Thank you so much for joining with me.